Welcome to USAWatchdog.com. Happy 2017. And I have come up with the perfect guest. People love this guy. He does what's called predictive linguistics, and he goes out on the internet and he uses billions and billions of pieces of data and information, throws out a lot of them, but he comes up with predictions based on what he data mines off the internet. I am talking about Clif High from Half Past Human. Clif High, thanks for joining us today on USAWatchdog.com. And I hear you got a bunch of new data to spit out here right at the beginning of the year.
That's correct. Thank you very much for inviting me. It's nice to start a year this way, especially a year that has such auspicious data chunks to chew on.
Well, let's start with politics, if we will. Donald Trump, is he going to be inaugurated, and is Barack Obama trying to create as much chaos as possible? Take that question any way you'd like.
The latter half would go to intent, and I truly don't try and answer any question related to why someone does something, because I can rarely figure out why I'm doing anything myself.
Fair enough.
Okay, so it's not really fair. However, the chaos part, sure, that's coming. We actually have forecasts for a sort of a Israeli freakout or mental breakdown that will occur, that we'll see the manifestation of in mid-February. And it's going to be akin to, how do I want to say it, a spat and a series of skirmishes that will be economic. And so we'll feel it in mid-February. So the chaos part has started, but the results will come on in a while. What's really curious about this was that in our latest report, which was issued yesterday, but has been compiling over the last 45 days, that showed up long before we had any of the rejection or any of the maneuvers within the UN that produced the results. So I knew we were racing time. I actually had to cut 5 pages out of this most recent report, which ran long anyway, simply because the stuff was happening faster than I could get it into the text to be able to put into the report. So the chaos is correct. I don't have any issues showing up within the data sets that suggest we're going to have a curtailment of the emotional trends that we have now. This is another way of saying I don't have anything that says hard stop, Trump's assassinated. I don't have that.
So it looks it looks as though your data, if you were going to read your data, and you have to interpret a lot of stuff because you do this all the time, you're brilliant. Incidentally, you've done all kinds of work for Microsoft and all kinds of work for tech companies. You've been flown all over the world to be a troubleshooter for big tech companies. It's a little bit more about your background, but back to your data and your predictive linguistics. You're saying that it looks like Trump is going to be inaugurated. That's
Correct.
What your data is saying.
Correct.
Because a lot of people on the internet are saying,
if I had to actually back my data with real money, a piece of silver here, I would do so. I would say I have this ounce of silver that I would be willing to bet that the inauguration part goes through as smoothly as it's possibly going to, given the emotional data sets we're dealing with now.
So, and what are you seeing for the markets? I think the markets just on a technical basis, all-time highs have been reached at the end of this year. The Dallas Fed president, I brought this up in my weekly news wrap-up, Richard Fisher, about a year ago, almost to the day, about a year ago in January, beginning part of January, he said, we front-loaded the system, to create a wealth effect. And he said on the set of CNBC, you can see him say this, and he says, we injected, we injected cocaine and heroin into the system. So... Yeah. And I know that's probably popped up in your data sets more than once. Well, what happens when you come down from that cocaine and heroin? What do you see with the markets? What do you see with the economy coming down the pipe with your 2017 forecast? Which, incidentally, will tell people how they can buy this report at the end of this show. But what do you see with your 2017 economically speaking?
Okay, let's we're going to have to sort of divert here. I was going to show this later, but your question is just so easily answered with this weird chart I've developed. And I say weird because it's not like everybody else's chart that you might see in a financial or even on your show, the charts that have been presented in the past on your show. This one is a little unusual because it deals with the emotional state of what we call USA POP, the subset of the global population that is bounded by the United States. And this is covers three areas: our politics, the financial system, and what we're calling the discovery in our report. Now, the financial system is easily described here with chaos and all kinds of linguistics and stuff, but I'll show you this chart and it'll give you an indication of the emotional parameters. But let me preface it by saying that the bottom of the chart is not as meaningful as the mid-level. This is one of those kind of charts where we have a zero line that is in the middle, and above that zero line, it represents building emotional tension. And below that line is release of emotional tension. Now, that's not good nor bad either way. Building tension can be good and building tension can be bad. An example of building tension might be all of a sudden you grip the hand holds on the seat of the airplane because you are good hit something you think. And the release tension is when you go, oh, phew, we didn't have it happen. Now, building tension can be good when all of a sudden you realize the surprise party is for you. And in that case, the release of that tension can also be good. So they're not good or bad per se. And you'll have to guide me on this because I'm not good at getting these kind of chart things.
Okay, hold it up. I'll get you. Yeah, okay.
Okay.
All right, I see it up. I see it very clearly, very clearly.
Okay. All right, well, here's the line for, this is our zero line. It's hard to see probably.
No, I see it. We can see it.
Okay, that's our baseline. This is the emotional line for our financial system. Ooh. We're in building tension now. We should be a lot closer to this line right here. People are somewhat euphoric, and this represents the emotional flow through the year. Now, this is the summer solstice. This is the spring equinox. This is the autumn equinox, and here's the winter solstice. We work on a lunar calendar, and that's just how it divides out evenly or easily. So in the first part of the year, we're going to be riding on a sleigh ride up that's going to bring us down this way. Now, when we're going up, we're building our emotional tension, good or bad. But when we start coming down, we're releasing that emotional tension, good or bad. And so you see that we're going to be in a long period of release that gets us into a severe release period back here at the end of the year. I suspect because of the words that I have associated along these lines, that by the time we get down here, a lot of that language will be very negative. Very much, expressions of a bad mental state or emotional state relative to our financial system. Whereas right up here, we have a lot of words that, as you're seeing in all of the financial press, about the Trump euphoria kind of thing relative to those. Okay,
that makes sense.
Okay, so that's there. Here's our politics. You have all of the people that are crashing because they had including the legacy media, because they had that huge emotional investment in a particular outcome that did not happen. And you notice that that's going to keep going and going and going. There is no countervailing political equivalent of this financial euphoria for Trump. And so we have a situation here where the expectation is that the political fracturing will continue and continue and continue, even though theoretically or supposedly the Republicans are the winning power, if that makes sense right there.
So, in other words, what your prediction may be saying is that there's going to be a lot of consternation and a lot of strife politically, that the other side just can't accept that he won. They just can't accept it, and they're going to fight him at every turn. Would that be a good?
It's a lot more complex than that, but that's an element of it, yes. But you have to understand that it's also a lot of the Republicans that can't accept that Trump's in position now because they were tied.
Yeah, that's right. Yeah, I got that.
They were tied to a political elite that's now on the way out, and so it becomes ever so complex because that emotional, the emotional language around politics includes how the populace feels, how it's being directed to be felt by the media, by their pumping out of, what do they call them, talking points. Okay, whenever you hear that kind of words from, way back in the previous century, those talking points are essentially the words out of the agenda that we want to repeat ad infinitum until the populace spits those back out just as a routine, a Pavlovian response to anything we bring up relative to that subject. It's a method of mind control. And so, for instance, the most recent set of these talking point words were the xenophobe, misogynist, and racist. And they were just labeled Trump that way. And anytime any of the subject came up, these things were triggered in those people's minds. That's kind of the thing being expressed within this political line that the whole mental structure is coming unwound relative to the political parties. So we see within the data sets in a specific level, we see all kinds of problems for funding for the Democrats, and to a lesser extent, all kinds of problems for funding for the Republicans. Within the Republicans, there's an echo of the larger fracturing as the Republican Party establishment, if you will, the rigid part of the thing that's tied into the deep state struggles to stay alive. And that's all also going to be replicated on the larger side as the Democrats try and figure out where they're going to fit in what's going to be evolving.
Do you think, do your data sets see any kind of a crash or any kind of a financial calamity? I mean, the 10-year Treasury has been spiking upward. The stock markets at all-time highs. Bonds are at nearly all-time lows. They're only about 1% off the bottom. I had Warren Pollock on here, and he says, well, we may get to a 9% Treasury a lot faster than you think. It could spike up pretty fast. What say you about the coming year and finances and markets?
We're screwed that way. I mean, the markets part, if you're referring to the equities, is really this rather amorphous mass within our data sets because it's so manipulated. So if you say, will there be a crash? There already is a crash. Everybody that's not part of the financial system at the top end is currently living in a depression, and the media does not acknowledge this. So, for instance, the reason that you can get all the people in West Virginia to be sucking down all of this synthetic opium all the time is because they're back into Appalachian 1930s depression levels there, and no one even talks about it. The fact that it's not discussed is what is so hurtful and so harmful to the overall USA body politic. Because it's a terrible thing to know that there's no job that you can find. You're a young man. You're trying to support yourself. Maybe get out of your parents' basement. Maybe you're involved with someone trying to create a family, and you can't find work, and you can't find people to offer you to train you for skills or anything. And yet, at the same time, it is denied that the reality that you experience is real because everybody says we're in a recovery and all of this kind of thing. So the mechanisms are all coming unglued at the body politic level. So we're in a depression now, unless you're attached to the Federal Reserve's tit. Unless you're sucking money out of their system, you're off on the outside. You're starving. And there's very little hope. And so the hopelessness, the despair, that kind of thing, that exists now, especially in the data sets. So to say there's going to be an equities crash is meaningless to all of us that are not participating in that paper. To say there's going to be an economic crash is old news to all of us that are living in a situation where there's no jobs and there's no hope for work. So as a linguist, I get a little irritated because as far as a crash goes, yes, there are signs that the equities markets is going to go over 20,000 and then pull back. But is it meaningful? I don't think so, except for the 100,000 computers that are trading stocks with each other. At that level, the dollar is much more important because it's the purchasing power that the masses of USA pop have to exist with at the moment. That purchasing power is going to be eroded away fairly quickly. I suspect that the erosion is going to start in March or so. So if we want to call it a crash, I would say that's our best timing for an opportunity. And it may indeed involve the equities at that point, but basically, who cares? They're not really meaningful in a retirement sense for anybody that's saving for retirement through them, because the equity market is not a realistic gauge of how you're going to have spending power when you attempt to tap into that. It's a very complex subject, and you get back into the meaning of it all. But from your question, I would have to say that our worst or the turning point of the Trump euphoria and that kind of stuff will hit at the very end of February and will carry us through March and April. And there will be probably people that will define it as a crash.
What about let's get back to the dollar and interest rates. Should we take those together or separately? What do you see happening? You just touched on that the value is going to be eroded, and I know your data points point you big time into silver and gold long term. I know that, and so tell me about your views on the dollar. Is this going to be a big year, a big pivotal point for the U.S. dollar?
Yeah, it's we have something that basically is an echo of the first 3 or 4 months of Reagan's period relative to the economy and the dollar and so on. What we don't have is the saving of the dollar that came out of Reagan's time. So in our data sets, again, around March or April, the erosion of the dollar continues in order to try and offset that in a laggardly way. The Federal Reserve starts trying to chase interest rates, again, in our data sets. Your friend's suggestion of 9%, I would say that probably is a little tiny bit low in the sense that the real shock may be at 9.5 or 10%, and we'll probably jump to that, and we may jump to it as quick as March or April.
Wow, that's a big prediction. Where do you think interest rates will end up at the end of the year? Can you peer that far out with your data sets, or do you have any kind of prediction?
We don't have a number for there. Okay, see, there's the thing. Numbers rarely come up in the words that we're sifting for, and yet numbers are ubiquitous and power the internet. So we have to scrub out most of the numbers. I don't really trust digits that show up in our data sets, so it has to be spelled out. Actually, literally.
Yes, linguistically.
In the data. Correct. And so I don't have anything for the end of the year relative to that. So whatever the solution is, this is a conclusion that and an opinion that whatever the solution is that's proffered by the powers that be for the developing economic crises over summer and into August is not going to result in language about, say, 20% interest rates. If we do have 20% interest rates at that period of time, the emotional weighting of the language we have now in terms of our forecast would suggest it would be so minor as to not really make much of a splash. Make sense?
You mean that 20% interest rate wouldn't be enough to fix it, you mean?
No, yeah, exactly. But also, let's look at it another way. That if we had 20% interest rates that were effective at mortgage rates in September, the way that this data is being described for the financial system and such then, that 20% interest rate is like, oh yeah, of course, that's a minor thing. Just who cares about the interest rate if the real estate market crashed 4 months previously to the point where
nobody's buying houses anyways.
Correct, and so we actually do have a lot of data sets about regional banks, both dollar dealing banks. So not only the USA but also Australia and Canada. And see, there's a slop over there because the Canadians call their money loonie, but it's also called the Canadian dollar. And so we have the same with the Australian dollar. So it's difficult to tease those out at times out of the sets. And so at the moment we have data sets around the dollar that by the time we get into, say, midsummer, we should be able to look back over the previous couple of months and say, wow, look what happened to the real estate market. And we're talking about.
Do you think this real estate market will crash and crash hard?
I think prices in dollar amounts and will drop, and I think that will drop as a result of the regional banks and the what I'm calling a credit freeze, for lack of another word. But it may be that, like, we think of the spigot of the loans being turned off. And so the banks aren't loaning to a level never before imagined, and thus you may keep lowering the nominal value of your house, but there's no takers because they can't get finance, even if they were financeable.
Oh, so people with absolutely cash, liquid assets would be in the driver's seat.
We have actual language to that effect that the currency credit freeze. And it keeps coming back to currency, so it gets complicated. But within the banks, there's going to be such that the banks that have foreclosures that they nominally own, they're going to dump them onto the market to try and raise capital. It doesn't show up as the word capital in our data. It shows up as the word cash. Like, we really need the cash in our system, that sort of thing. And so the data sets are putting out language that say places like California, a few other places around the nation in terms of the USA are going to have a cash crisis such that banks will be discounting the house, just getting the foreclosure out on the market, and then they'll advertise that they'll discount that. In other words, they're going to say, here's a house for X amount of dollars and we'll finance you. And then, hey, if we don't have to finance you, if you've got cash, why, we'll lop 30% off, that kind of thing.
Warren Pollock said that he thinks the real estate in the blue states, California, New York, whatever, Washington State, place like that, Oregon, Illinois, he thinks all those places in the blue states are 75% overvalued. What would you say about that? You think real estate could come off, like Warren Pollock says, 75% from where it is now in certain areas?
We've had long-term data sets that suggest that the generation of the millennials at some point in the future, so probably 10 years out maybe, will be looking at 90% off of the peak in terms of nominal dollar amounts with an adjusted dollar. So I don't know what that means in terms of what the purchasing power of the dollar might be. So I think that he's correct and will probably exceed that level.
Wow, that is
now
unbelievable.
Here's other issues. Here's other issues as well. The data sets have been describing this kind of strange property market crash. And by property, it's a broader definition that includes not only raw land, but also houses and also commercial. And a lot of the language is taken from the foreign descriptions of property markets. So we get the property ladder in there because that term is used in England and in Australia, and to a lesser extent in Canada. And the language is about the high end crashing first, such that it gets down to a certain level, and then it meets the middle tier, and then they crash to meet the lower tier. So it's not going to be just the high end coming down and then everything stabilizing. We're seeing a generalized property nominal price crash that is going to really just coincide with the inability of the banks to circulate enough money to create enough debt to sort of blow the balloon up again.
Do you think we have a bank holiday? Is that showing up in your data sets where they just close the banks for a week or 2 weeks or a day or some reset or something like that? Are you seeing Jim Rickards, best-selling author, 4-time best-selling author, says, hey, listen, when this thing resets, and it's done it in the past, this time it's going to be, closed down for weeks, maybe once the system when it resets. Are you getting anything about a reset, bank holiday, that kind of thing?
We get some of that language, but not about a coordinated day or a coordinated period of time. Rather, it appears as though local and regional banks fail. Some of them get shuttered. Literally, they shut all the doors, and then it's a chaos as the next tier up tries to absorb them. While that's going on, we have other areas where banks effectively do shut themselves temporarily, trying to recover. And so you have that kind of a chaos. We don't have like an organized thing from the Federal Reserve saying, okay, on this day, everybody shuts down for even 2 or 3 or 4 days, although the net effect is probably that same thing in the overall term of language. But we're talking about something that's spread out over a lot of months.
And you don't think we get any kind of a crash before Donald Trump gets in the office? We don't get any kind of a beginning crash before, like what happened at the beginning of 2016. The stock market's terrible. I mean, it started off the worst start ever. And it's looking like...
No, I'm not saying that explicitly. I'm not saying that at all. I'm saying indeed we do get that.
Oh, we do get a crash starting at the beginning of the year. I mean, this thing will just keep going from... So Obama does not escape office without getting the beginnings of a pretty hard crash before Trump is inaugurated. Is that a good...
That's a good understanding. But now let's be very selective in our terms here. I'm not saying that the equities are going to march down from 19,000 into some much lower number. But what we do have in our data sets shows that there's a lot of upward pressure on gold and silver and Bitcoin as the currencies go into a crisis mode that basically is already happening. Now, here's the issue, okay? This is why I had to get the report out yesterday, and I really kicked myself for not getting it out on the 28th. And that's because we had stuff within the immediacy data. Now, immediacy data is effective from 3 days out until the end of the 3rd week, but really it's effective from almost instantly from the time we get it, because it's so the nature of that particular kind of language. So I had language about what we're going to come to call flashies, okay? There are going to be so many of these flash crashes that they're going to start calling them flashies. And so this was pretty clear. And we also had data showing that there was going to be one of these things before the first part of January. And lo and behold, this morning when I get up in the news, there was a flash crash of the dollar. And so here we have a web bot hit in a very prescient manner, because I was able to get the report out a day before that occurred. And there was no language anywhere yesterday or the day before about having a flash crash. There was no So it was truly prescient language that came out. Now, another part of that prescience is that we're going to have these flashes as a repeated part of or repeated component of our technological age here going forward for at least the next few months. And so we are going to have these, especially as we move into January. And we also have January 8th through the 12th as being a period of upsettedness in global markets. Now, by this, though, we're talking more about bonds and derivatives and currencies. That is to say, what they call the foreign exchange market, the FX market. We're talking more about those than we are equities. And we're talking less about silver and gold than we are currencies because they're more manipulated, and there's actually less language that we've got that they'll be as wild as the gyrations that we're likely to see in other things. So one thing that I would take as a sign of a crash, even though it wouldn't look like it, would be a sudden spike upward in the value of Bitcoin in Chinese RMB or yuan, and its corresponding sudden spike upward in US dollar amounts. That's a real good sign these days in our global manipulated markets that we're looking at an economic event or a financial system event underway in real time. And now I say real time because Bitcoin's traded in real time fashion 24/7. It is manipulated to a small extent, but it costs the manipulators real Bitcoin to do the manipulation. So it's not like it's controlled the way silver and gold are. And my predictions on Bitcoin have been much more accurate than those on silver and gold relative to price because it is not so easily controlled. Thus, the new prediction sets we have are showing us swapping over to RMB as China takes over the emotional control of if you will, of the Bitcoin world. And a lot of their rush into that is fear about the currencies. Now,
the U.S. dollar. They're fearful of the U.S. dollar, Treasury bond. Nope.
Nope. The Chinese people. We don't care about.
Oh, I see. Okay. Yeah.
Okay. We're talking about China pop. We're talking about the populace.
Okay.
Because basically what we do is we take and aggregate everybody's emotional leaks into a thick syrupy mass and then try and pull out some meaning out of it. So China pop is going to get really freaked out. And we show it in the 8th through the 12th. There's going to be something in there where China pop's going to get really freaked out about the value of their own currency. And there's going to be more of a tendency and a rush into Bitcoin. Now, at some point this year, China, the official authorities, are going to just give in to that. And there's going to be a change in their official approach to this whole thing.
And they're going to say, go ahead and use Bitcoin. Go ahead and use it.
Boy, if you read our report, you're going to be staggered. It's going to be more than that. China's going to rush out because of the way they do things. The Chinese authorities know their existence, their lives depend on the health, wealth, and happiness of the people below them. And so somebody's going to come up with an idea to extend digital currency and Bitcoin, and we have the language there, to people who trade goats now. Okay, and the idea is that China, along with their Silk Road train from Beijing to Berlin, is going to extend out fiber optics and bring in over 1 billion people into the internet in the shortest possible time, maybe less than a year, and that they're going to do it, and at the same time they're going to spread the Bitcoin ethos through there. So it's just going to be quite staggering. Now that probably won't happen until later in the year, maybe in this summer. But we do have that in the data sets, among other things related to currencies and so forth. So getting back to your original point there, though, about the beginning of this year, the Trump euphoria may be reflected in equities, but it won't be reflected in the things like the bonds and the derivatives and this sort of thing. And that's where our trouble is going to come from. So I'm looking at Bitcoin prices as my only even close to unmanipulated metric as to what's going on in the global economy.
And you think Bitcoin is, because it's not manipulated, it's going to reflect fear, it's going to go higher, people are going to flood into it, prices of Bitcoin are going to skyrocket because they can't really hold them back.
Correct.
I got it. Okay, and then what about gold and silver? I mean, let's get the dollar, gold, and silver all in here. What are you seeing with your predictive linguistics about gold and silver and the U.S. dollar? Is that a teeter-totter? Do gold and silver go up? Does the dollar go down? Do they both go up at the same time? What happens with gold and silver and the dollar? A lot of people
All
don't
of
know
the
that.
above, all of the above, and a lot more strange stuff. Okay,
Okay,
so
let's
all
start
right, let me
with
go.
whatever,
Let me
wherever
go
you want to
back with the
start.
dollar. All right. Back when I first started this work in 1997, it had been my goal to make a big pile of dollars by using this approach to predict which way the stock market was going to go. Because at the time, I was under the understanding that there were enough retail investors that I could game their emotional direction. Since then, the data has always had a strong component for the dollar in there that's been very predictive of major dollar crashes. And we're getting a culmination of a lot of these things in these recent data sets relative to the dollar, silver, and gold. Let me state that there is a corollary or a postulate that we have within our data sets that the longer something appears in the data sets with consistent growth behind it, or even irregular but persistent growth, the more impact it'll have and the stronger its eventuality to appear, even if the timing is off.
If you keep
So,
seeing it, in other words, if you keep seeing it, it's going to get stronger.
correct, it'll have a
Okay.
larger impact. And
All
so,
right.
basically, another way of looking at it is if you're going to get hit by a little tiny bit of future knowledge, you're going to get a little tiny bit of a ping, so to speak. But if it's going to be a big thing that's going to affect lots of people, it'll sort of roll over you, and you get this big
Ah,
pressure. Okay,
very
so
good. Very good description. Thank you. Description. Thank you.
okay, so now we've had that big thing coming at us since 2003 that I kept describing as the dollar death. And at about that point, I got onto radio and I made this connection at that time in 2000, early 2000s, between 20,000 Dow and $600 silver. And at the time, from that point on, for the next 10 years, I got a huge amount of trouble for making those two statements. But those were the only numbers I had. I didn't have a timing on them, but I knew it would be associated with some stuff that would have happened in the near the autumnal equinox after that in November. And so we're at that point now where all this stuff is culminating. And here we're getting close to the $20,000 Dow, but we have not achieved the $600 per ounce silver. However, the data sets are suggesting that the temporal link that was noted way back then, almost 20 years ago, is still valid, and that we're going to go through a period of time where silver, in a very short period of time, apparently, and that might be within these next 6 months, where globally there's going to be a huge divergence in silver. Now, the reason that we're concentrating on silver has to do with its value relative to the average paycheck globally, because people are not in a position, excepting in places like India and China, to buy gold. It's easier, cheaper, available to buy silver. And there's also now another component to that. This idea that they're going to confiscate gold is naturally going to force people to think about silver. And so we get this emotional boom and boon for silver that begins almost on the very first day of January. I think it's probably the second or third trading day that we see this. And it's coincident with this rise in silver is coincident with a forecast rise in the price of Bitcoin and its forecast connection between that and the Dow at 20,000. Now, all those years back, our view of this particular time was not so granulated that we could say $20,000 Dow here and $600 silver 4 days later. We didn't have that. We had $20,000 and $600 per ounce silver clumped in something that we knew was an amorphous mass that was out a number of years, and that's as close as we had. But we knew those two were temporally tied together. Not temporarily, but temporally. They were tied together in time. And so now we're seeing all kinds of language come out about multiple $100 silver and the difference between them within our data sets. So the expectation is that we may see $125 an ounce silver. If we do see that here in the United States, the data is saying that the real price of that silver will be over $100 difference outside of our borders and may approach something closer to the real price of silver in our borders, but that it will be on a delivered in hand or gray market kind of a thing, and will not necessarily reflect what's going on to paper markets.
Oh, it could be like spot silver is $100, but the commission's $100 an ounce because we don't know where it's going. So it's be2. So what's going to happen is that delivered in hand, that's a commission over spot. They charge it on everything, on all you do. Unless you're buying it from your Uncle Joe, you go to a coin dealer, they charge you. They have to make money on the trade, and so you're saying that you could see a spot posted price, but the commission would be way higher.
Correct, and it won't be a long duration event. So the way that the data describes this, from the period of time that we start getting into this spread or this delta, that's $100 to $125.
Does it go to 600 though? Does it actually go to 600?
See, we don't. There's the thing. We have more data building in under those sets at the $600 level, but I don't have any new numeric values at 600. That's just the way the stuff works.
But you think 100 something?
We have 125 is when. So we do have one number there. That's 125, and then we have another number of 345. If I'm doing the interpretation correctly, then what we will see here may be something like $25 silver in the U.S. paper markets, but $125 to get that same ounce of silver actually in your hand here in the U.S. But outside the U.S., somebody might be willing to pay $345 for that same ounce of silver, should you be able to get it to them. And it'll be due to the way that in which our dollar and our paper system is structured and controlled. But that shows is lasting very few months. I mean, if I had to guess here, it doesn't appear to survive, say, much past the first part of August.
So it's going to spike up and then sell off?
No. It'll go to no offer.
Infinity.
Correct. The data sets basically say you just won't be able to get hold of any of it. So the whole market just is kind of moot. And now there's the rub. We have all kinds of language about, gold and silver taxation attempts at a form of confiscation in the broader global population. I have some hints that there's going to be those kind of attempts here in the United States as well. But I don't have any clear language as to when this is going to start, because we end up with this rather chaotic period that's going to be linguistically, that's going to be through summer, northern hemisphere, which is going to include us. So from the summer solstice on through to the autumnal equinox, the end of September, is going to be a language period where we have as shown on that chart, we have our financial language into big release. That's a lot of people running around, releasing their emotions about what's going on. And I don't think it's a happy release. So the expectation is that we could have huge amounts of swings of silver and gold and so on in there and have absolutely no market at all.
What about, let's just got straight on gold just for a second. Let's just try to laser this thing into gold. And I want to talk about inflation, because obviously if you're going to get big spikes in silver and gold, the dollar is going to get crushed, apparently. But let's start with gold. Let's move on to gold. Gold, what do you think is going to happen with gold? I mean, we're at, 1150, 60, whatever it is right now at the beginning of the year. What do you think happens?
We still have support building for our previous discussion, where gold will equal the Dow.
And hold on, just before I go on, there's all this talk about, gold's going to go down to $600 an ounce or $300 an ounce, and there's very, very dire predictions about how it goes way off. You're not seeing that. You're not seeing a big crash in the gold. You're saying this is probably the bottom right here?
No, I don't see. There's the rub, guy. The way I built my system, I was really pig ignorant, and I never even looked for things like shorting opportunities. So I never really tried to follow the downward trend. I was only interested in stocks that were going to go up. And I was going to buy.
Okay.
So my system has a couple of blind spots built into it. But in that regard, though, there's stuff showing that an ounce of gold is going to be able to buy the Dow, and that will occur sometime after the autumnal equinox, or near that period of time. Now, we also have other stuff at that point suggesting that the Dow might well be $125,000 US to purchase it, whatever it is composed of. So, they may change the different companies in there, and there's all different kinds of strange stuff relative to the layout of our economy and what's going on at this deep, dark, what we call woo-woo level. The woo-woo is all of the officially denied, unknown UFOs, strange, spooky stuff humans can't explain that does not come up in the academic paradigm. And I'm suggesting very strongly with this very large report. I mean, we ran a lot of extra pages in this report, even with the ones I had to cut out. But I'm suggesting very strongly that from 2017 onward, that our friend, mutual friend here, Bill Holter, I think his truth bombs are going to start coming on out. And it's not going to be limited to just the economy. And so we're going to get something that we can describe in a loose way as disclosure that woo-woo is moving into a more dominant consciousness or awareness in our consciousness period from this point onward. And so
In other words, aliens are real.
Oh, much that's old news.
Okay, all
I
right.
mean, that is so prosaic
Okay.
as to be,
In
not
other
even
words,
an issue.
aliens are controlling us in some way. How about that?
Sure, yeah, and it may even be stranger than that. Where and a lot of this stuff is going to come out of what we're calling the discovery, simply because it's going to make such a huge difference to humanity over these next 30, 40, 50 years. In our reports, it's describing a world that we don't actually live in right at this moment, but that we're transitioning into. If accurate, if these predictions are accurate, they appear to be developing that way, especially around those things that are not manipulated. The actual appearance of climate, weather, the appearance of new property, new lands rising, all of these are forecast. The rain bombs, the lakes and rivers in the sky that suddenly dump out on us, the sudden freezing of whole herds of animals, all these things were forecast years before they occurred within our data sets and described. Now, following that same woo-woo trend of basically science fiction, and that's what we called this report, was sci-fi world, because we're going to be getting into a world in which the past expectations of even things like physics or weather or climate cannot be relied upon to be persistent into the future. And so our future is going to involve a relooking at a human history that'll go back 7,000 years, that's going to upset a lot of people whose thinking is so rigid that they're not going to be able to accept the developing reality around them. And we also are suggesting that a lot of this is going to come from this discovery that has already occurred in Antarctica, probably occurred 20 years ago, and we're just now going to start hearing about it over these next few years. We now have physical, political, economic evidence that a lot of our forecasts about Antarctica. Now, bear in mind something that I need to point out. When I first started my reports, the very first run I ever did, focusing in on trying to make money on the stock market, two things came up that absolutely shocked me. One of them was the sun, the big scary ball in the sky. The other was Antarctica. It was all through, both of those were all through that first data set. And from that point on, I was so intrigued, I forgot about the stock market stuff and went out in the woo-woo world. But now we're getting to the point where the data is saying woo-woo is going to start kicking ass and taking names. It's going to start dominating, that we're going to start seeing the real information about where our trillions of missing dollars are slowly percolate out. We're going to see new inventions pouring out all over the place as they've been officially allowed to, because we need them now. And a lot of this is going to pivot around whatever it is that's been discovered in Antarctica. And I think the giant pyramids that are 3 and 4 times the size, and in one case maybe 20 times the size of the largest pyramid in the Giza Plateau, I think these pyramids in Antarctica contain stuff that's going to tell us a lot more real information about our history than we could ever imagine. And I also think these pyramids go back to the other half of this precessional cycle, and maybe all the way even through it. So at least in the order of 12,000, if not 21,000 years. And so our ideas of who we are, how we came to be, and what we need to be thinking about as humans are actually involved in this report in a way I never anticipated. Let me also state that when I go into doing the interpretation in these reports, I don't really have a clue as to what we're going to be looking at other than those dominant sets that may have appeared in previous reports. So I go to look to see what's happening in USA Pop, but it can change from month to month to month. We also had this weird situation develop in our work here that took about 5 years to mature. And I discussed it over the period of time in radio interviews and even wrote articles and stuff about it. And it was what I called this context change. And that occurred in the early 2000s. I couldn't figure it out. I just knew there was something big coming. We were all going to reel under it, but I couldn't get a handle around it linguistically. But it was going to change the context around a lot of words that we ended up using. Long story short, it turned out to be the undocumented workers coming out and saying, we're here, we're not going to go away, you got to deal with us. Basically, you've got to change your context of thinking and deal with us as real humans in the here and now, not gloss us over with all of this paper illusion, so to speak, that we don't exist. And so that context changed for USA Pop. That's a huge mass of population, 350 million people. And their mental structures whether they were an undocumented worker or not, they all had to change. We all had to reshape our thoughts around that language to embrace what had just happened. This context changed. In our data sets, it ran 18 months before I talked about it, and then I talked about it for probably another 18 months before the first parts of it matured. We're in the midst of one of those right now. Only it started way back before I even started this work, probably.
With Antarctica, with all the president going down there, Kerry going down there, other dignitaries going to Antarctica. All of a sudden, everybody's going to Antarctica. Bizarre. And you think it has something to do with this big change in thinking about who we are, where we came from, and what technology is really available to us that's going to be pushed out because we need it now.
Correct.
Oh boy,
it's spooky. It's weird. It's science fiction. It's woo-woo. And there is detail like you wouldn't believe. There was so much stuff about Antarctica. I got sick about looking at it in the data, and it's just going to get bigger.
In other words, you're talking about times when Antarctica. They have maps in the 1500s where they drew Antarctica with no ice on it.
Correct.
And so, I mean, Antarctica is a huge continent, and there's a lot of history there. Evidently, that's been covered up with 3 miles of ice.
And there's cities underneath. Right now, there's giant voids in there that are so tall that you can stack the Eiffel Tower on top of itself 3 and 4 and 5 times and not even touch the top of this void. These voids run over long rivers. The rivers are at 60 and 70 degrees Fahrenheit temperature, and they've melted the ice and created these giant warm air-filled pockets that run throughout all of Antarctica. They're just now talking about them.
And you think there are people living there, or aliens, or somebody?
Something. There's old civilization down there. There's stuff that's been under the ice that is showing up in our data sets as affecting our technological future. Basically, from 2017 onward, we're seeing this stuff leak out. Now, in our language, we have a lot of released language now about Antarctica, in the sense we've got a lot of people wondering, basically, as we just said, why Kerry? Why did the popes go down there? Why did Obama go to Patagonia and then sneak over there? Why are all these people going to Australia and then sneaking over to Antarctica? What possible reason could Obama have to go and look at ice in Antarctica? He knows what ice is like. He swirls it around in his drinks. He's from Hawaii. He's just not the extreme sport loving fellow. And even Kerry, who rides a bicycle and, that kind of thing, and does at least exercise at a serious level, he's not your extreme sport, let's go out and climb mountains for the fun of it kind of a guy. So why did he go there on the critical day for his party's election? That kind of thing. So it gets really spooky when you start reading our reports. So if you're going to buy our report and you're going to think it's all about the economics of it, at one level you're correct, because that affects all of us. We're all living in a depression. But also there's this whole woo-woo component that's really bubbling to the surface. Now, part of this is, I was just going to bring this up. It's going to sound really strange, but if you're as old as I am, you remember this movie called 2001: A Space Odyssey.
Yes, Hal.
Correct. But all of that, forget all about that. Go back to the beginning of the movie that wasn't the ape man. Okay. It was these people that were digging up a obelisk. And we see the obelisk on Earth, and then with the ape people, and then we see them digging it up on the moon. Excuse me. What we're getting now is data sets that would basically describe people digging something up in Antarctica that is solar system effective, so to speak, solar system involving. And in order, so we're not even really getting the pictures of the people digging in terms of the descriptions. What we're getting is descriptions about the massive logistic effort that's going to take greater than 10 years to do to build out bases in Antarctica and Patagonia to get down into Antarctica to start getting the wealth out of whatever it is they've found. We've got data sets in there that are suggesting, and it can be totally wrong, can be totally screwed, okay? Very rarely has that happened, but it did occur once. But we could be really wrong on this, but the data sets are suggesting that whatever the discovery is down there is going to be a source of wealth for the greater part of humanity for perhaps hundreds of years. So a staggering kind of a find. And we're not talking about a big patch of oil. We're not talking about a resource in the sense of a big chunk of gold. The data sets have actually described this stuff as not precious metals, but precious technology.
And I want to close because I want people to buy a report, because I don't want to keep you on too much longer. I do want people to buy a report. Get that in a minute. What about the war card? And your report is huge, and we're just really kind of glancing over the surface. What about the war card? Are you seeing anything on war with this most recent set of data?
Yes, we are, but not as you anticipate. The war that we're seeing described is more of a war between clashing elites and not so much clashing soldiers on the ground at the behest of those elites. So the war could be described as a political battle between existent power cliques or power clubs, and it's going to get really bloody and nasty and so on. But in the sense of, we don't have anything that says that Russia's going to lob nukes at us. We don't have anything that says that the United States is going to be super aggressive. As a matter of fact, we actually have stuff that suggests that the United States is going to run into an economic problem this year or into 2018 that's going to be so severe that the issue of base closings is going to come up in a way that it used to be felt in, say, the 50s, when the U.S. Army tried to close bases down after World War II and consolidate and save money. It would cause huge amounts of angst in local communities as they saw their primary source of income going away. We have that huge amounts of angst language showing now, but around the whole planet as the United States contracts due to what's going on to the economics. So we don't have language that says we have the economics to support war.
Oh, okay. With that, I'm going to leave it because I want people to buy the report. And you can go on halfpasthuman.com and you can scroll down. I put a link up to your buying page, but that link usually gets destroyed for some reason to your page. But you can just go on halfpasthuman.com, scroll down, and buy the most recent report. It's only $15. Is that what this report is? $15?
Correct.
And how many pages is it?
45, yeah.
40? Man, that is a... I'm not trying to sell stuff for you, and I'm under no obligation to say this. That sounds like a deal to me.
It's a pretty sweet deal for a view of the future, and if even a third of the stuff came out, there's actionable material in there for you. So, yeah.
Okay, well, listen, Clif High, halfpasthuman.com. Thank you for being our first guest of 2017.
Thank you, sir.
First guest, my friend. You killed it. You absolutely killed it dead. Halfpasthuman.com, Clif High. Thank you very much. Go to his page, scroll down. You can buy his report. Thanks a lot, Cliff. We'll see you in the next few months.
Thank you much.